Hey, everybody, welcome back. And it's going to be another beautiful day out there. It is hard to believe it is May. I'm not sure where March and April went to. However, it is definitely May 2nd. If you guys have any questions, make sure you post them down below. We're going to go over the April metrics. We're going to talk a little bit about home prices, both locally and nationally, because that's some of the reporting that's coming out. Remember, there's no marketing here. It's just solid information for you guys. But if you wouldn't mind, let us know what you think of the show, and share it with people that you know. This way, they get really good information. So, with that, the question is: home prices edge higher, but the momentum, well, it seems to be edging and fading just a little bit. And is that really the case? Well, let's find out. Okay, so when we take a look at it, we talk about home prices not only on a local level, but on a national level. And as you can see, they're talking about numbers from February and March and how we're seeing things going. And is that really consistent with where we're at today? And I say that because, you see, we have a number of what we call seasonal times that come into play. One is, hey, we have the vacation trifecta that's going to be coming up this month. So about mid-May, we're going to start slowing down a little bit. And then as we edge into Memorial Weekend, again, the weather's getting nice. So buyers, they're not focused as much on, especially on the weekends of, hey, let's go take a look at homes. It's, hey, it's not snowing outside. Let's go out and play, and they'll be out and they're going to walk and they're going to do things. And that actually starts to affect our real estate market. We call it the real estate ghost town, because then as the Memorial Weekend kind of rolls in, guaranteed everybody's gone and mentally on vacation. And then with that, then kids get out of school and things transition. You might say, well, not everybody has kids. So I understand that, but that metric, that kind of ghost town feeling will last all the way through to July 4th weekend. The Monday following July 4th weekend, boom, we hit our summer market. We'll actually start to see a lot more activity. People are wanting to make that change. They've already had their summer vacation, and they roll into, hey, let's go back into house finding mode. And hey, we've got kids that are going to be getting into school, so we need to be in that specific school area. And then that will fall off probably about mid to late August. Then we have Labor Day weekend, kids back in school, college kids back in school. Everybody wanted to get a vacation before, the weekend or the snow start flying again. And then we'll actually start hitting at the late September. Our market will pick up again until about right around Thanksgiving. So with that being said, let's talk a little bit about what's going on here when we say prices change a little bit. When we take a look at what we have for our titles, our headlines, as you can see in the upper right, hey, listen, rates have been bobbling up and down because of what's going on with Iran and whatnot, and also based on what the Fed say. Bottom left, March housing starts surge, 10.8%. Hey, let's be clear about that. When they talk about starts, they're talking about new construction starts. Those are, permits. That's where we're going to physically break ground and build a home. Now, those have started on an uptick. Super interesting. We're going to see metrics later. We're going to see some what appears to be bad information, and then we're going to realize our information actually is pretty good. We're going to get into that. And then, of course, as we come back over, mortgage rates surge higher as U.S. considers a longer blockade. Now, understand, the mortgage rates, which are publicly traded, the feds have nothing to do with it, albeit the feds can affect, as they did this time, they can affect what's going on, but they don't control mortgage rates. Those are, well, they're publicly traded mortgage-backed securities. Watch your bonds. If you watch your 10-year treasury, even though they have nothing to do with it, they freakishly follow each other. And it's a great, simple ticker to watch. So if 10-year treasury goes up, mortgage rates typically go up. 10-year treasury goes down, typically 10-year treasury goes down. They don't follow it all the time, but I would say 98% of the time they do follow it. Anyway, So let's move on. So as we roll over, let's take a look at what Freddie has to say. So Freddie says, hey, George, rates went up a little bit on our running 7-day average, but we're still 0.5% lower than where we were at last year at this time. More importantly, we're a little bit lower than where we were at last week, which is still really good as you saw the peak there and as it rolled back. But listen to this. The possibility of prolonged blockade on the Strait of Hormuz. Markets took this seriously because, again, they bumped prices just a little bit. But then you have the Feds. Now, the Feds, again, when we talk about, they can affect, they don't control mortgage rates, okay? But they affect it. Here's the effect, right? So it says the Fed announcement that while the Fed did not hike rates, 3 of the Feds voiced their opposition of the wording that basically they did not like what was implied, and the Fed is more inclined to cut rates versus hike them in the near future. Now, you might be saying, well, wait a second, what does that mean? Well, it's simple enough. What the Feds are doing, and again, there's a little bit of dissension between the Feds. There's a little bit of drama that's going on there, but watch the dot plot. Okay, the dot plot, which is a chart, Google it, dot plot, Fed dot plot. You'll see it, and it's where each of the Feds and where people think that rates are going to be, and they've been heading in a downward trend, okay? And once that kind of changes, or once they get concerned about inflation, once they talk about what's going to be happening, that actually can adjust, and they can start changing that dot plot up, which then most of your mortgage lenders will then bake in a mortgage rate adjustment, like you'll see here momentarily, in anticipation of this information, okay? And so like this, we saw in the prior chart on Fedi, you saw it went down, then it went up, then it went down, then it, boop, and we had that little spike. It's because they started building in that rate hike already in anticipation of this meeting because they had a suspicion how it was going to go. And of course, that's exactly how it went. So the average mortgage lender is back to between about 6.5, 6.3 for top tier 30-year lenders. That is up from 6.38 yesterday. When we take a look at what's going on with some of our April metrics. Now, understand, this is super important. The metrics that we're going to go through, we're talking about April. We're not talking about February. We're not even talking about March. We're talking about April's metrics. The folks, my friends at Trend Graphics, we run the same metrics each and every week on residential homes. You're going to see exactly what happened in April here. Not what happened nationally, and there's a lot of things happen nationally, but our market here, we're going to talk about what happened here because that is what's most important because that's where you're buying or selling. All right, so let's jump back into this. So funny enough, we actually are down to 7 days at the end of April, year over year. We were only 7 days longer in as far as time on market, and that's that center grayed out green, gray time on market chart. Bottom right, year to date, we're 10 days. So we've actually come down quite a bit because we were up almost 21 days. And then, for the price, yeah, we're still at 99, 98% of list to sales price. And you might say, what the heck does that mean? Super simple. If I use $100,000 and I sell at $100,000, that means I have 100% list to sales price. Now, if I list at $100,000 and I sell at $99,000, that is a 99% list to sales price. If I sell at $98,000, it's a 98% list to sales price. You get the gist of it. So we are within 1%, and we have been trailing that 1% all year long. In fact, we've been trailing it since about October of last year. But our other metrics, as far as volume of homes coming on, going off, in fact, let's take a look at that. That is where we're seeing a huge benefit. Now, look at this. Friday is always a big list day. That's the biggest number we've seen year to date, 1,402, 100% seasonally normal to see that number that high. And Friday is always a big list day, midweek. They were about 1,100. Still, we had, 1,300 homes that went pended, just like here, 1,255. 1,255 homes went pended, which still tells us that we are absolutely taking off. Almost as many homes coming on market as going off. And our inventory, when we take a look at it, doesn't change a whole lot. Remember to like, share, and subscribe. It just super helps the channel, make sure people get the information that they need. Let's talk about April metrics. Here we go. Center chart at the green. Look at this. So even though it shows we are 28% higher in inventory, if you look at the bottom right white chart, we're actually down year over year. We're down 231 homes because we have less inventory year to date than we were at last year. But at the end of April, we saw a big surge of homes coming on market back to the green center. So number of solds, we were off just a little bit. We're 172 homes less year over year for the same month than what we sold in April of last year. But look, we're 901 homes higher than where we were at this time last year as far as pending. That shows you our trending that we're putting more homes under contract. Go to the bottom right white chart. Look at that, 1,092 homes more pended than we were at this time last year. We are down to 231 homes, like I said, for number of homes coming on market. And that is a big deal because, again, this is showing us where we're going and how we're hitting this positive trend, even though some of the metrics are like, well, are you sure? There's your numbers for you. And that's super consistent. Now, single family only. I do not include condos. Condos are suffering. Condos really kind of drag down the metrics, but you have to separate the two because they are just two different cats altogether. Condos and townhomes versus single family detached. That's just two different games. And I do not include the two. That's a different report altogether. All right. So let's come back. When we come back and then we take a look at what we're doing as far as average pricing. Average pricing for this week dropped just a little bit. That doesn't mean home values dropped. In fact, it doesn't mean that at all. What it sold last week was $16,000 higher. What we went this week, I think we're $12,000 less. It always goes up and down like this every single week, depending on what is moving, what are interest rates doing, what was booked and what was not. What we look for are the continuous down, or up. We're always looking for that. But when it's just doing this, that is situation normal. Okay, so let's get into the chart here. April 26 numbers. Sales are down slightly at 3.2% year over year as far as closed homes, right? Pended are up 901 homes or 16.6%. Average time on market was 10 days. We're actually, when we talk about, for the month of March, we're actually only 7 days off from that one. And then, I guess that was April. And then average sales price is only down by $15,000 for the month of April. Year over year are about 1.7%. And then mortgage rates, a little bit lower, 0.5%, basically where we were at this time last year. So what is important about that? Hey, listen, as that rolls into new construction, those are where, and the nemesis for new construction, funny enough, is existing, or resale construction, all right? Because that's their direct competition. Now, on the chart, if we go back one, hang on, let me show you this chart. Let me remove myself here. When we look at this, and you look at the numbers on the left and the right, and you're like, oh, okay, well, that looks pretty flat. And it has been pretty flat, except for if you look at the left side, you can see we're in a downward trend. And on the right side, we're hedging more towards upper flat. But list prices have been coming down, but still higher than last year, right? So as we come over here and we take a look at it, center green top, that shows year over year for the same month of April. We had basically 10.3 homes more coming on market, or roughly about, what is that, 100 and let's just say it's shy of 200 homes. And then when we take a look at our pendant is doing really well. They finished the month super strong. Pendant sales were up 13.6 percent. And that's going to give you, again, roughly about 100 different homes, just shy of that. And then on the bottom right chart, our year-to-date number of homes for sale is actually down year-to-date. And pendants are down just a tiny bit, not very much at all, as far as going pendant. And the number of solds, that number of 14.8%, that actually improved. They were up in the 20s, then they came down to the 18s. They went up a little bit. Now they dropped down to 15, 16. Now we're down into the 14s. We did drop down briefly to 11.5%. Then we bought back up again. Again, it's doing that situation normal. Builders offering a lot of incentives. There's some great opportunities that are out there. You're just going to pay a premium for new construction, but there's ways to get additional benefits other than price. Builders don't like to play with price. There's other incentives that you could benefit from. Make sure you're working with a real estate broker that understands how to negotiate those things with builders. Just saying. All right, moving on. So when we come back here and then we start taking a look at the actual sales prices, and you look at that and you're like, holy mackerel, that looks horrible. But yet when we take a look at the average sold price, we're actually up from where we were at as far as the month of April. We finished out at about 1.2%, roughly about $11,000 higher year over year. List price is just a little bit higher, roughly about $30,000 at 3.1%. If we take a look at the bottom right, you can see that our sold price basically is the same year to date. So we are spot on. List prices are up at about 2.8%. And as you saw from the prior chart, they're moving homes, and that is really the best thing. So let's get into bank-owned homes real quick here. Again, some of the numbers are going to look super crazy, but it is situation normal. And if we take a look at the top left, we have 13 more homes on market for the month of April than we did the prior year. Pretty much small potatoes. Some of the metrics, because they are so tiny, they make them look percentages wise like it's massive. Like we say, hey, there's a 89% increase in pending foreclosures. Woo! Well, that's not very exciting because it's not very many homes at all. It's less than 25 homes. When we take a look at the bottom right, year over year, we're up 80 homes from where we were at this time last year. Again, as you see up above, there's been an uptick, in COVID era defaults that we're dealing with. And that, again, is situation normal. Our numbers are so low that it's not very exciting. And banks are able to get par pricing. Look, we're still one of the top 5 markets throughout the United States. And that says something, even though, we're not making any land speed records. We're not going necessarily down. Well, rural areas are going a little bit further down because of the downward pressure. Fuel prices, cost of living increase. People are returned to work. People are wanting to be in a little bit closer, and that's why we're seeing some of those better numbers. Now, if you have any questions, put it down below. Smash that subscribe button. Let me know that you really like this. And hey, get alerted every time we do these videos, which is awesome. So with that, if you have any questions, let me know. It's going to be a beautiful day. Have a great weekend. Welcome to May, and I'll see you on the next video. Take care.